We're going to be recording or simply calculating provision for bad debts. Just to give you a background of what provision for bad debts is, provision for bad debts is just an estimate of future bad debts that will be written off. Note that the provision for bad debts wouldn't exist unless we sold goods on credit. So we need to have credit sales. So when we sell goods on credit, it carries the risk that we might not get the money back because some debtors will not be able to pay us back. Now, the debtors that don't actually pay us back, we are going to recognize them as bad debts. Bad debts is an expense. The reason why bad debts is an expense, whenever we recognize bad debts, we debit bad debts, which is an expense because it reduces the initial sales income that we recognized. At the same time, we will credit debtors control because remember, when we sell goods on credit, we normally debit debtors control. So if those debtors can't pay us, it makes no point, it makes no sense for us to still have debtors control reflected at the same amount. We need to take them out of our debtors control to make sure that our current asset, which is debtors control, has been reflected at the correct amount. So provision for bad debts is simply a future estimate of bad debts. Bad debts are simply debts that will be written off because debtors will not be able to pay us those amount. So the provision is simply an estimate that has been calculated using the history. It depends on how our debtors were paying us over the years, and we use that information to help us calculate provision. Provision, please note that it's simply a future estimate of bad debts that will be written off, of debtors that will be written off. So let's just get straight into it. What is provision for bad debts? As I have said earlier on, it is an estimate of bad debts expected to be written off by the entity. Here we are estimating the amount of debt to be written off. Since it is just an estimate and not the actual bad debt, it is called a provision. It will be written off as an expense when it is actually goes bad. Okay, it is a valuation allowance that reduces trade debtors. The provision calculated by the entity during the year might be different to the one that has been calculated at the end of the year. This might be due to circumstances that prevailed during the year. Now, provision for bad debts adjustment, what is it? Provision for bad debts adjustment will either be income or an expense. It arises when the provision for bad debts amount calculated during the year, the one that we have in the trial balance, is less or more than the provision for bad debts calculated at the end of the year. The provision for bad debts reflected in the trial balance must be adjusted by recording provision for bad debts adjustment as income or expense. Now, how do we calculate this provision for bad debts? Provision for bad debts as per the adjustment is calculated as a percentage of the adjusted amount of trade debtors. I need you to highlight that, especially when you get the worksheets. Make sure you highlight that it must be a percentage of the adjusted amount of trade debtors. It is important for you to take into account any adjustments that will result in debtors control amount being reflected, that is reflected in the pre-adjustment trial balance to be adjusted up or down. Any information that will result in your provision for bad debts reflected in the pre-adjustment trial balance to be adjusted up or down needs to be taken into account. Okay, the adjusted debtors control amount will be used to calculate the final provision for bad debts. Now, your final provision for bad debts might result in you either having provision for bad debts adjustment either as an expense or income. Your provision for bad debts adjustment will be an expense when the provision for bad debts amount calculated during the year, the one that is in the trial balance, is less than the provision for bad debts calculated at the end of the year. Please note that we don't want our provision for bad debts to be high. Okay, we don't want our provision for bad debts to be high. And the accurate provision for bad debts will be the one that is calculated by you as you are instructed under adjustments. So if the one that you calculated is higher than the one that is in the trial balance, note that the difference will have to be an expense and will be recorded under operating expenses in your statement of profit or loss. The provision for bad debts reflected in the trial balance must be adjusted by by recording provision for bad debts adjustment as an expense, because we need to take it up to the actual provision that we calculated. Now, your provision can also be income if the amount that is reflected in the trial balance is greater than the one that you calculated as per the adjustments. Now, the difference, you can recognize it as income, as it means that the one that is in the trial balance must be brought down to one that you calculated. And we want our provision to be down because it simply tells us that in the foreseeable future, we will not be required to write off bad debts as we initially expected. So we might have to write off lower amounts of bad debts. That is why we recognize it as income. Now, the final provision for bad debts, the one that we calculated, must be recorded in trade and other receivables by subtracting it from trade debtors. The reason why we subtract it from trade debtors is to make sure that our current asset, which is trade debtors, is valued at a correct amount in your notes to the financial statements, which normally goes to the statement of financial position. Remember, your asset reflects economic benefits or money that you expect to gain from those assets. Now, in this case, those amount of money, if there's a high potential that in the future you will not get them, it makes sense that at the moment you need to reflect them at the correct value. That is why we subtract from the provision for bad debts from trade and other receivables. Provision for bad debts that you calculated, the final amount that you calculated, will increase on the credit side. And the reason why it increases on the credit side, it is because you expect to write those out in the future, write them as bad in the future, therefore reducing your future economic benefits, okay, or the money that you expect to receive from your debtors in the future. Therefore, those circumstances that will prevail in the future, we need to reflect them now in the current financial statements. Okay, example 1 says, given the extract from the trial balance of included traders for the year ended 28 February 2017, and we are given the pre-adjustment trial balance of included traders for the year ended 28 February 2017. They gave us debtors control of 70,000 and provision for bad debts of 7,000. Under adjustments, we are required to calculate provision for bad debts at 11%. So it is 11% of the adjusted amount. Fortunately here, we didn't have to adjust our debtors control amount of 70,000. So we'll go straight to it and calculate the provision. Now note that your provision for bad debts adjustment will either be under income or expenses. And I will explain as we go why we reflect them under either income or expenses. Now our provision in the trial balance is 7,000 as you've just seen. The one that we need to calculate, we are going to calculate it as a percentage of trade debtors. And our trade debtors is 1,000 and you multiply it by 11%, it will give you 7,700. Note that the 7,700, it is the correct provision. So the one that is in the trial balance is incorrect. It needs to be corrected by increasing it by 7,700. Now, whenever we increase the one that is in the trial balance, because it's less than the one that we calculated, the difference, we will recognize it as an expense, okay? Now, in this case, our expense will be 7,000 rand. How did we get that 7,000 rand? I simply took the 7,700 and I minus 7,000, actually 700. So the 700 that I got is simply 7,700 minus the 7,000 and I got 700. That 700 rand is your expense. It will be reflected under operating expenses. Please remember to show these workings in brackets. So you're going to take 7,700 and provision for bad debts adjustment, which is an expense of 700. In trade and other receivables, 20,000, it needs to be adjusted down. We need to decrease it by the provision to reflect the current circumstances of economic benefits that we'll get in the future. That is why here our provision, the final provision that we calculated, we're going to reduce this from trade debtors. We're going to actually subtract it from trade debtors to get our net trade debtors. Our net trade debtors for 300, which reflect economic benefits or money we expect to get from debtors in the future. And that is the definition of your asset. Asset is simply economic benefits, or in easy terms for high school purposes, it's simply money you expect to get from your assets when they are converted into cash. Because we don't want our debtors to remain in our statement of financial position as debtors. We need to make sure that we reflect them at the correct amount, because we need to convert those trade debtors into cash. They need to pay us. Now, because our provision for bad debts adjustment was an expense, how do we adjust the amount that is in the trial balance? We need to make sure that we increase it, okay? Now, the increase of our provision for bad debts will result in an expense, which is provision for bad debts. The reason why we're debiting it, because that is an expense of 700. And our final provision, as I've said, will have to be increased. So our provision will have to be increased to 7,700. And provision increases on the credit side, as I've explained. That is because it reduces your current asset, which is trade debtors. And that will be our provision. As I've explained, the one highlighted in green, this is an expense, and expenses increase on the debit side. And the one that we highlight in blue, it's simply our debtors control, it should be credited. In the general ledger, our provision for bad debts will increase on the credit side, okay? And you realize that our provision in the trial balance was reflected as 7,000. We're gonna start with that balance, but we need to adjust it by increasing it. Therefore, when we increase it, it'll increase on the credit side, as I've explained, because it reduces your asset, it'll increase on the credit side. It's a valuation allowance, you need to remember that, okay? And our new balance will see the correct value of our provision. Our provision that we have just adjusted, which is provision for bad debts adjustment, because it is increasing, it simply means that it will be debited. If it decreases, it will be credited. In this case, it will be debited because when it increases, it creates an expense, and expenses increase on the debit side. In this case, our expense will simply be 700 Rand. Let us look at example 2. In example 2, we are given an extract from the trial balance of included traders for the year ended 28 February 2020, pre-adjustment trial balance of included traders for the year ended 28 February 2020. We have debtors control of 81,000. We have provision for bad debts of 9,811. Note that under adjustment, they simply told us that a mortar must be written off. So we need to write off an amount of 900 Rand, meaning that at the moment, our debtors control amount can't be that 81,000 Rand because we need to write off a debtor. So we need to reduce that 81,000 Rand. Now that 81,000, as I've said, it's incorrect. We need to adjust it by subtracting the 900. That 900 will be what we call bad debt. So it'll go under expenses. It is the actual bad debts. I will not do it right now because you guys did it in grade 10 already. You already know how to record that. I will focus more on the adjustment. They said provision for bad debts must be adjusted to 11% of trade debtors. So I will have to adjust my provision for bad debts to 11% of trade debtors. But question is, will it be 11% of 81,000? No. Remember, provision is calculated on the adjusted amount of debtors control. So it can't be 81,000 because our debtors control is no longer 81,000. There was a debtor, a mortar that must be written off. As I've told you earlier on, when we write off a debtor, we debit bad debts because it's an expense, but at the same time, we credit our debtors control. Okay, because it's going down. Less people are owing us. When a debtor can't pay us, it makes no sense for us to keep them in that debtor's control. We need to take them out. And you need to come up, remember this when you do internal controls. Some businesses will cheat, even though they know that this debtor must be written off, they'll keep the debtor in their debtor's control because debtor's control is an asset and that is their way of making sure that their assets are overstated. Therefore, they'll be violating accounting principles, okay? So we can't do that. We need to make sure that we do things the right way. Now, what are we going to do? We are simply going to take the provision for bad debt that is given to us in the 8,811. How did we get that 8,811? I took the 81,000 Rand and I minus the 900 Rand that must be written off. And the difference was multiplied by 11%. That's how I got the 8,811. When you take 8,811 and you minus it from 9,811, you realize that the final provision is less than the one that was reflected in the trial balance. So this is good for us because the one in the trial balance must be adjusted down to the actual amount that we calculated. When we adjust down the one that is in the trial balance, that difference is income. So in this case, we're going to have provision for bad debts, which is an income. That is because the provision for bad debts that is reflected in the trial balance is greater than the actual provision that we calculated. How did I get this 1,000 again? I took 9,811 and I minus 8,811. Income, I'll have provision for bad debts adjustment. I repeat, provision for bad debts adjustment. That adjustment word is very important. You leave it out, it simply means that you're left with provision for bad debts. And provision for bad debts is not recorded in the statement of profit and loss. It should be recorded in trade and other receivables. Therefore, if you write it as provision for bad debts, you need to get -1 because that is a foreign item. That's why it's very important to write the word adjustment. Without that word, you need to get -1 because provision for bad debts, it goes to trade and other receivables. Provision for bad debts adjustment, which is the difference, will be the one that goes to the statement of profit or loss. In trade and other receivables, I will simply subtract from my trade debtors because if they are no longer reflected at 81,000, the debtor was written off for 900. So my trade debtors will now be at 80,100. And it will give me my net trade and other net trade debtors, which is in this case 71,259. Because it was income, we are simply going to reduce our provision. Remember, our provision for bad debts increases on the credit side because it reduces your asset, which is your debtors control. We are going to reduce it. When we reduce it, we debit it. And our provision for bad debt adjustment, because it's income, it will be recorded on the credit side as 700. In the general ledger, we're going to show our provision that we have in the trial balance, which is 9,811. That must be reduced. Then provision, as I've said, will decrease on the debit side by 1,000 rand. Therefore, provision will be reflected at a correct value of 8,811 in this case. So it will be credited. Now, because it's an income, it will increase on the credit side, which is 1,000 rand. We just find the total. Let us look at example 3. In example 3, we are given an extract from the trial balance of including traders for the year ended 28th of February 2020. The pre-adjustment trial balance of including traders for the year ended 28th of February told us that we have debtors control of 110,100. Provision for bad debts is 8,500. Now, these are the adjustments. The entity received 20 cents in the rent from the insolvent estate of T. Mulife, who owed us 2,000 rand. So T. Mulife owes us 2,000 rand. And remember, an insolvent estate simply means that T. Mulife's assets have been dissolved. So basically, T. Mulife couldn't pay his debts, and now his assets were taken. And now the insolvent estate gave us only 20 cents of every 1 rand that T. Mulife owed. Now, in this case, T. Mulife owed us 2,000 rand. Now, 20 cents simply represents 20%. So we are simply going to get 20% for every 1 rand that he owed us. We will simply get 20%. Now, we are simply going to forfeit 80 cents per rand, which is 80% of the total amount owed by him, which is 2,000 rand. The transaction has been recorded in the cash receipt journal, meaning that the 20 cents part, the one that we received, has already been recorded. Now, this adjustment is instructing us to write off the amount that this person still owes. Now, if this guy was owing us 2,000 and we received 20 cents, it means we received 20% of 2,000. The amount that we didn't receive, which is 80% of 2,000, we need to write it off as bad debts, meaning that our debtors control is not sitting at 110,100, it's now sitting at 110,100 minus the amount that this guy didn't pay us that we need to write off. Please note that the 20 cents has already been deducted from 110%. How do we know that? It is because this adjustment tells us that the 20 cents has already been recorded in the cash receipts journal. And remember, the debtors control column under your cash receipt balances journal. It is recorded on the credit side of your debtors control in your general ledger. So we have already reduced it by 20 cents, by 20% of 2,000. So we need now to reduce it by the total amount of 2,000. But because we've already reduced it by 20%, we now need to only reduce it by 80%. Okay, and then note that our provision will be calculated at 10% of trade debtors. It can be 110. It's 10% of 110 minus 2,000 times 80%, because 80% of that 2,000 we need to write it off. It hasn't been deducted from our debtors control. Now, let's put it in numbers. So our provision, the trial balance is 8,500. Our provision that we calculate at the end of the year will be 10,810. How did I calculate it? I took 110,100 and I minused 80% of 2,000. That is 80%. The 80% is the amount that I did not receive. Okay, now the difference will be the one that I multiply by 10%, and that will give me 10,810. Now you'll understand, you'll realize that the provision that we just calculated is greater than the one that is in the trial balance, meaning that the one that we have in the trial balance have to be adjusted up, and that is bad. So the upward adjustment is an expense. Remember that. That is why we have an expense of 2,350. How did I get it? I simply took 10,810 and I minus 8,500. And the difference, we're going to record it under trade and other, not trade and other, wow. We're going to record it under other expenses, and the amount will be 2,310. Now, in our trade and other receivables, our debtors control will have to be adjusted by minusing it, by minusing 1,600 from it. That 1,600 is 80 cents. I took 2,000 and I multiplied it by 80 cents, or 80% or 0.8. Okay, that's how I got that 1,600, which represents bad debts. We were supposed to record bad debts under expenses, but I'm not doing bad debts this year. We did it last year. But know that that 1,600 will be added to the bad debts amount that is reflected in the trial balance to get the total bad debts, because this is a new data that has to be written off. It's a new bad debt in essence. All right, and this will give us 108,500. Our provision will be 10,850, and that must be subtracted from our adjusted debtors control amount, giving us our net trade debtors of 97,650. Our provision for bad debts adjustment is an expense we debited, meaning that the provision that we had in the trial balance has to be adjusted up. Therefore, the provision for bad debts will be credited, because provision for bad debts increases on the credit side. So we're taking it up from the amount that we had in the trial balance to the 10,850. So we're taking it up by 2,300. Expense of 2,350. In the general ledger, provision for bad debts will increase. We'll start with a balance which was 850 to get a new provision of 10,850. Our provision was an expense, therefore we're going to debit provision for bad debts adjustment by that 2,350. Please do this activity and check the next video for solutions.